Welcome to Barry Charles, your one-stop shop for everything finance. And in this episode, it's all about Palantir to the moon. Yes, we're going to take a deep dive into Palantir stock. Yes, we're going to do a stock analysis on Palantir. Will this continue to go as we expected right on this channel? It's been a long time coming, but I'm back and ready to take you on a ride to the stratosphere of financial abundance. Yes, welcome back, guys and gals, to the channel. If you think the opportunity for Palantir into the future is still there, you may be mistaken, because there could be a little bit of a bumpy road the next few months as the stock has gone to overvalued opportunity. But is the future still bright, and you can still buy at this price now to make yourself a billionaire? Not financial advice, but yes, in this episode I'm going to give you the knowledge to understand the data around Palantir to give you an opportunity to maybe look at buying the stock in the future. Not financial advice. We're going to have a look at PE ratios, return on invested capitals, the net profit, assets and liabilities, shares outstanding. We're going to give you a crossover of the main financial metrics, and if you stay right to the end, I will give you the ultimate intrinsic value of Palantir right now. And what I'll do is do a base case for you. I'll do a bear case, base case, optimistic case, and then shooting for the stars, stratospheric sort of numbers. And I could probably go to the super stratosphere, but I will try to restrain myself to at least be in par on what's actually happening in reality at the moment. Doesn't mean it could go to bananas. Look in the video. Can Palantir go in the same direction? That is the question mark you all have at home. Well, let's get to it. Remember to like and subscribe to Barry Charles right here, right now, where all your financial news is. Yes, Palantir stock analysis, and we'll finish right at the end of this video with an intrinsic value for you. Yes, well, where do we start here with Palantir? Well, we're going to look at the key metrics here, and first off, we're going to start with what it's actually currently at. $70 roughly a share right here, right now. It could go up and down from time of recording, but this is just a rough idea where it is right here, right now. The 52-week range of $15.66 all the way up to $81 nearly. Unbelievable move this year for Palantir. Outstanding. Can this be the stock that gets you to 10,000%? Wow. It's got a long way to go to be that sort of stock. Obviously, if you brought in real early on, then potentially it is a buy for you. But let's have a look at the earnings per share at the moment is 0.38. So that's where the earnings per share is at the moment. Then the PE ratio is an astronomical 187. So that's out in pie in the sky sort of numbers. This stock is going to go to infinity and beyond. So if you believe in that, buy. Not financial advice. They have no dividend currently. I'm sure that'll probably come in about 5 years' time, maybe, once they're fully established. Short interest, only 4%. Oh, this would have been a stock that was 40% not long ago. The stock has really gone to the stratosphere. Market cap of 170 billion. So it's got nearly a 5x to get to $1 trillion. Can we get to $1 trillion, folks? And all of us will be retiring, our Palantir shareholders. I am a Palantir shareholder. I am not hiding the fact, but I'm giving you insight to what is a potential option to where to buy this stock at. Ideally, you would want to buy when it was as low as $6. If you got it at that price, congratulations. Like myself, but does that mean do you stop buying now and wait for a dip? Yes, potentially, but also, is there metrics to say that the stock is going to go higher than what it already is? That is the question we have for you right here at Barry Charles. We answer all your questions about finance. Yes, well, let's have a look at the annual revenue Um, Expected to be getting close to that $3 billion mark by the end of the year. Might not quite get there, but that's what is potential from last year's 2.2 billion. So they are absolutely flying up the scale, folks. Yes, they are doing beautiful stuff. And then their net income is roughly going to be at 500 million. It could push 600 million by the end of the year. We will see if they get a skyrocket in Christmas time here, compared to 209 in 2023 and negative 373, folks. Negative $373 million. Yes, just 2 years ago. Who want to be in the stock right then, right now? Me. Yes, I could see the future was bright, and that's the time to buy. Doesn't mean you can't buy now. Return on invested capital, folks, 42%. One of the top notches in the league when it comes to it. Absolutely. That's outstanding. Just going back to the quarterly reports here, I just want to give you an idea around the revenue side. The quarterly report has 72.5 million for September, and then back in June it was 67.8 million. So they're going up. And then if we look at the net income, it's 143.5 million in September compared to June's 134 million. So not a huge jump, like about 9%. So probably question marks. You really want that to go up if you're thinking this company is going to be the next biggest thing. So there's some work to do for Palantir, no doubt about it. So you're having a high return on invested capital allows that high price, potentially to give you a bit more inflation on the price. So that's a positive. But shares outstanding again, they continue to dilute you. That's the one thing I don't like about this company, even though I'm an investor. From 1.9 billion to 2.46 in the last 2 years, they've skyrocketed up and up nearly 6% on the year. It's just not good. It's not good. And you also, on top of that, you've got stockholders compensation that continues to weigh down this company as the employees continue to reap the benefits while the other shareholders lose out. But that could change in a few years' time, let's hope. Assets versus liabilities. Well, they've started to get a bit more liabilities lately, but the assets are up 5.7 billion from 4.1 billion, but also big jump, 1.2 billion in liabilities from 961 million. So there is a bit of jumping around here. But good to see the assets are really going up as well. So that's pretty outstanding performance. As we look at free cash flow of around $1 billion, so they could pay this off within just over a year. They probably will be already at that cash flow by March for sure. I would say in the free cash flow seats, they could pay off their debt straight away, and maybe they should, and just get it off the books and move on. Whether or not they do that, I'm not sure. But what does this mean for you at home? And just remember, just 2 years ago, there were 184 million in free cash flow. Before then, there was none at all. So for them to do that, it's impressive. That's a big jump. From 184 million 2 years ago to 1 billion free cash flow. Woo! Just over a 5x effect. They are flying up the charts when it comes to that, and that's why people are excited about the stock. But have we seen it all before? Bitcoin has flown to the moon and crashed back down to earth. Are we going to see the same thing here with the stock potentially? But what do I see? So net income needs to go up more. It's positive over a year thing, but just look at the quarterly, it's not quite going up as quick as I would like. So you probably want that to accelerate. The revenue is going quite nicely. Return on invested capital, if they can keep that going for another 10 years time, you'll buy all day. No pun intended. Do your own research before you buy any stock. But the stockholders compensation diluting is not good. That's not going to help you. The same with the shares outstanding. So that's something you need to look at. But a lot of companies, when their price is real high, they issue shares because they're at a premium and they can get some money out of it, and it makes sense on that front. But you wouldn't want to see them buying probably at the moment. You want to wait till there's a dip to see them buying, because they had been buying out shares before. We'll see if they continue into the future. Now, let's have a look at a calculator here. This is what you all came here for. Yes, I came here to tell you what the intrinsic value potentially is of Palantir. So I'm going to take a bear case scenario. I'm going to take a Yeah, bear case, a base case, optimism, and then an absolutely out of this world trigger, and see what we come up with. Well, this is just a basic calculator. You could go way more extreme than this, but this is just for simple folks at home that don't have the opportunity with all that stuff. You don't have to pay for all the stuff that people are trying to sell you, folks. I'm telling you now, even though it can help you a little bit, but at the end of the day, there's a few ways you can win in investing. There's a few things. You got one, buy and hold. Potential stocks, and know when to sell if it's a dud, regardless of the potential. You really want to look for stocks to make money. You wait for a stock that's not quite profitable yet, that's on the way and it has trended towards profitability. Those are the ones you buy. If you want to make decent gains, you can obviously make decent gains lower down, obviously, but you can risk it going to zero. But when a company's, before it gets to that big stage when it's in the Wall Street size, that's when you buy. If you do it then, like Palantir was, the $6 to $12 mark around there, even 20. If you got in that time, you're celebrating right here, right now. So yes, let's have a look. So current share price was $70. So we're going to start with the bear case. So this is a simple grams calculator. You can find it online. This is just real basic, and it just gives you a basic trending of thing, and then you can just add stuff to it in your own leisure. But so bear case here, we're going to say roughly just where it is right now, 0.38, and say a 10% growth rate for the rest of all time. You're paying $11.30, folks. Wow. Yes, if we're looking at current metrics, apart from it probably 20% growth, so it would be a little bit higher, but I'm just giving a more of a bear case. You could go even better, but $11.30, folks. Wow. Doesn't that just silence you? And we do the same with the base case, but we put the earnings per share up a little bit to 0.5 and a 15% return. And this includes the current bond yield. You're looking at $20, and the stock's at 70. Just wow, you've got to be optimistic, folks, if you think this stock is a buy. Because on value metrics, you wouldn't want to be buying at the moment. Optimism, yes. If you're very optimistic, we're going to say the earnings per share is going to go 3x and go to $1 at a 20% expected rate. Then you're looking at $50 a share, folks, roughly. 50.6, you want to be exact. But you're $50 a share. What does that mean for you? Well, we're probably above optimism phase at the moment in terms of the share price. There's no doubt about that, and I've already thought that. But that doesn't mean you can't make money. Now, if we're going for the stratosphere, I'm not saying out of this world stratosphere, but it's still a stratosphere. It's going to go from 0.38 earnings per share to 2, with a 25% growth rate for the end of time. You're buying the stock all day as $122 projected growth. So that's why I'm telling you, folks, the next couple of years could be rocky. Getting that next double could be a rocky boat. Why do I say that? Because if they fail and they come in with a 20% around that mark, if they don't do decent numbers, this stock is going to crash and burn. I'm telling you now, this stock could go in half within a week. If they fail one time, so that's why they got to continue building these numbers. But if they continue to build the numbers, 100 is not far off. If they can continue to exceed. But if they start to flounder, you're starting to see the price fluctuate. And I think that $50 mark could easily come back into force. And even down to 35 if they really get bullish. But the stock is here to stay. So what do I think? What do I think they need to do? Well, they got to get their net income up. That's one thing. Growth overseas. They've got so much potential growth overseas. I don't know if they're putting enough effort into that. But if they grow overseas, the world's their oyster. If they can get big contracts in other places around the world as well as the US, they are going to be a conglomerate. At the moment, they probably haven't got the money, but acquisitions, they're only at $1 billion. But if they can get that up and buy some other companies that can improve their business, then look out. This company could be big. It's already big, but their $1 trillion mark is still over a 5x away, folks. So there's a lot of work to do for them to get to that level. They've got to get those big contracts over 100 million. That's where they're going to make the money. They need to get a lot more of those contracts. But yeah, if I'm trying to be absolutely bear case, where you want to buy the stock, folks. You here ideally you want to back at $12, but ain't gonna get there. Don't get it twisted. But potentially $35. But realistically $50 would be a time to buy. I think $50 you'd be alright. $35 you should be safe. You should be safe if you've got down there, if it ever got back to that level. But I still think the stock can potentially be a $200 stock, even higher. Potentially. Everything has to go right for this company. They have to smash everything for them to go to their level. 500, they might be pie in the sky at the moment, but if they can smash out things, anything's possible. And the thing you need to realize with stocks, folks, it does not always follow what the company is actually doing right here, right now. Why? Because there's a million things. There's machines involved, AI machines are involved in buying and selling stocks. Some stocks are more popular than others. That's why Facebook is always undervalued. 90% of the time is undervalued. It should be higher than what it is, but some people just do not go to buy that stock. So to me, your Meta, Palantir right now is a bit of a hold situation, but if you think the stock's going to 200, you buy all day long. But there's still a lot of work for them to do to really push anywhere near that number. They're not near that at the moment. They're even the optimistic case, so they'll be lucky to double their money from here. So that's why I do fret for you folks. If you buy now expecting the returns you've been getting, if you have been involved, I'm not expecting that in the short term. Long term, yes, I see it happening, but in the short term, in the next couple of years, you'll be lucky to double up, I think. I'll be stunned. Doesn't mean it can't happen. Don't get me wrong, and I'll be happy because I ain't selling. But if you're thinking you want to sell on the stock and you think it's going to be a gainer for you, and you like to sell out and buy something else to make you the money, good on you. That strategy will work perfectly as well. Anyway, that is the stock analysis and intrinsic value done for Palantir for you. I hope you liked this video. I will be back with another video shortly with SoFi. Yes, SoFi. I'm going to do the same thing for SoFi. I hope you enjoy your week, and I'll be back soon. And welcome back, y'all. Been a long time coming.